Welcome to Spidell's California Minute. I'm your host, Catherine Zidane. This week we're covering an expanded income exclusion for certain taxpayers who received settlements to cover wildfire-related expenses. We'll be covering this topic at Spidell's Federal and California year-end tax update, and you can register for an in-person seminar or live webinar session at spidell.com. California SB 132, which was enacted in late June 2025, allows for a retroactive personal income tax and gross income exclusion available for the 2021 through 2029 taxable years for amounts received by qualified taxpayers from a class action settlement in connection with a California wildfire. Previously, California provided a patchwork of relief related to various wildfires. SB 132 covers all wildfire settlements received going back to the beginning of the 2021 taxable year that were not previously covered, as well as the Los Angeles wildfires in early 2025. For the purposes of the SB 132 exclusion, qualified taxpayers are those who received class action settlements to cover wildfire-related expenses, including any taxpayer who owns real property located in an area damaged by a wildfire, any taxpayer who resides within an area damaged by a wildfire, and any taxpayer who has a place of business within an area damaged by a wildfire. California SB 159, which was just signed by the governor on September 17th, expands this exclusion by eliminating the requirement that the payment be made as part of a class action settlement. This allows taxpayers who brought individual lawsuits rather than participating in a class action suit to exclude settlements received in response to their individual lawsuits. SB 159 also clarifies that the exclusion applies to any settlement amounts paid in connection with a qualified wildfire disaster, which is defined as a wildfire for which the governor declared a state of emergency or the president has declared as an emergency or major disaster under the Robert T. Stafford Disaster Relief and Emergency Act. The statute of limitations period for the 2021 tax year could lapse as early as April 15, 2026. So it's important for tax professionals to review their clients' files now to see if they may qualify for retroactive relief and timely file the refund claims before the statute of limitations period lapses. On December 12, 2024, President Biden signed the Federal Disaster Tax Relief Act of 2023, which provides a gross income exclusion for qualified wildfire relief payments. The relief applies to any qualified wildfire relief payment received by an individual during the 2020 through 2025 taxable years that is related to a federal disaster declared after 2014 as a result of any forest or range fire. For tax years for which the statute of limitations has expired, taxpayers can file a refund claim for up to 1 year after the date of the FDTRA's enactment. A qualified wildfire relief payment is any amount received by or on behalf of an individual as compensation for losses, expenses, or damages that were not already covered from other sources like insurance. This includes compensation for additional living expenses, lost wages other than compensation for lost wages paid by the employer that would have otherwise paid such wages, personal injury, death, or emotional distress. California does not conform to the FDTRA. However, California's exclusion is broader because it does not limit the exclusion to amounts which cover expenses not already covered from other sources, and it applies to more tax years. California's exclusion is retroactive to the 2021 tax year and is available through the 2029 tax year, whereas the federal exclusion is available retroactive to the 2020 tax year, but is only available through the 2025 tax year. Spidell's California Tax Letter is a monthly newsletter that keeps tax pros up to date on California tax law changes. For more details and to subscribe, go to spidell.com and click Publications. That's all for this week. Join us next time for another episode of Spidell's California Minute.